Wonderful good day, ladies and gentlemen. We are in our studios in Munich here, and it's interview time, and we are very happy and proud to have here Mark Brennan, the President and CEO of Sierra Metals. You remember the beautiful producer from base and precious metals, producing in Mexico and in Peru. And he wants to give us an update. Mark, good morning.
Good morning. Good morning. How are you?
I'm perfect. Thank you. Hope you too, of course. And we want to talk about your terrific company. We did the last interview in your offices in Toronto, actually at PDAC. It's almost a year ago.
Yeah.
And I think in 2016 you have achieved really a lot. So maybe give us a short overview what you have done in 2016 and how you did your homework, I would call it.
Well, 2016 was a very good year for us. It was a year of building, and what we've been able to do is we were able to restructure our operations, to retone them, and basically bring them to a position where they're in fantastic shape to really look at strong growth as we go forward in 2017 and 18. So we really have a lean machine now, and things are looking very, very positive.
Fantastic. So you are producing in Mexico and in Peru, of course. And how were, let's say, your numbers in 2016? What have you achieved, like tonnage-wise, like grade-wise?
Sure. In terms of Yaracocha, which is our lead mine in Peru, we had record production for the second highest production in the history of the company. Wow. We've achieved record production in terms of volumes on a monthly basis. So things are looking very positive there. We're just shy of about 1 million tons of throughput in 2016. We expect that we're going to see a pretty good year in terms of EBITDA, something in the region of just north of $40 million, which is a good improvement from 2015. And now we've come out of the restructuring at Yaracocha in the second quarter of 2016. We think 17 is going to be a really strong year for Yaracocha.
Fantastic. So before we come to 17, because I think that's really a strong year for the whole company, can you give us a bit of an overview? Because you have a great cash position by now, but you have also some $83 million of debt. What are the next steps with the debt?
We'll be sitting on somewhere north of $40 million of cash currently, and basically we're looking at our debt position of about $85 million. Over the course of the year, we'll bring that debt down by another $20 million, if not more, and so we'll be in a very strong position. You know, I've come out on the record for 17 saying that we're going to be looking at the highest EBITDA numbers in the company's history. In 2012, we did about $83 million. So if you look at that on an EBITDA to net debt basis, we'll be running at about 0.5 times net debt, and that's a pretty healthy level to be at. So our balance sheet is very strong, and essentially that gives us enough liquidity to really build the programs that are going to drive the future for the company.
Fantastic. Let's talk about QC. That's as you said, our little baby. I like that. I mean, you already produce a little bit out of that. And what are the plans for 2017? What do you want to do with QC?
We've been producing about just over 1 million ounces per year of silver, and basically what we've been doing is producing from about 25 different mine phases. And so basically, it's been small veinlets that basically been very expensive to develop and work towards. So what we're doing is we've re-evaluated QC, and we've got a reinterpretation of QC, which is very similar to mines they're running along the same trend that we are. It looks very similar to many other projects going down to Fresnillo, Guanajuato, and Zacatecas, which are very rich silver districts. And what we anticipate is what we're seeing is much greater widths, as well as much higher ore. So as opposed to mining small widths and small veins, we're now looking at structures, and we're in the process of drilling to build out a resource for these longer, anywhere from 5 to 10 meter structures that essentially will give us much better mining economics, as well as providing much greater tonnage with greater grade. So it's looking fantastic. QC, again, it has been the baby of the family, and I think now it's just learning how to walk, and like hopefully in a year we'll be running. So it's looking very, very good.
So it will be a very nice contributor for the future.
Indeed,
right?
It's taken us a long time to get to this point. We've spent a lot of money on the project over the course of the last 3 or 4 years. Not as much as if you built a feasibility study and then built a big plant and such. We've probably put about $60 million into the project to date to get it to about 600 tons per day, which isn't bad. But at the same point, we believe now that it's at the point where we're going to be disclosing probably in the next 6 months, well within the next 6 months, that this is looking like it's going to be potential for a 2,000 to 3,000 ton per day operation. Wow. So a much bigger scale, much more viable entity.
Fantastic. Let's come back a bit also to 2017, of course, and let's say a bit more overall about the company. Right. Where do you see, let's say, challenges for the company, but and also on the other hand, where do you see room for improvement, capacity-wise, discovery-wise?
Well, I think there are two main facets for Sierra. Whenever you think of Sierra, you should be thinking of two things, and one is very strong cash flow growth, EBITDA growth, and basically that's coming from the optimization of our operations. And so in 2015, 2016, we spent a year restructuring Yaracocha, and Yaracocha is now running very lean, very positive. We've maintained our costs, even though we've added substantial increments to making the operations better on a day-to-day basis. But we've also increased our value per ton probably by about 100%. So from that perspective, we're mining much greater value ore while we have the same cost basis. So that's a really good, strong move in a positive direction. In 2017, we'll be doing the same thing in Mexico. So that's our challenge, as you say. What are the challenges we have in Mexico? Now we're going to do the same thing in Mexico that at Bolivar in particular, as to what we did in Yaracocha. Bolivar is producing around 3,000 tons per day, and really the optimization now is to take that to 3,500 tons, reduce its cost base. So we've got a really nice pipeline for 3,500 tons per day, and then in 2018, our expectation is to put higher value ore, higher grade ore through that 3,500 ton pipeline, which will generate very substantial profits. So again, coming back to what our challenges are, first and foremost is stable cash flow growth through optimization of production. The second leg, which I think is truly exciting as well, is actually the brownfield exploration. And this is exploration very close to mining infrastructure that we can bring into production within 6 to 12 months. And once we have these discoveries, and we have it at Cusi, as I say, Cusi is a whole new discovery now. So that's going to be a different type of animal, because we're going to see that potentially as a new mine. With regard to Yaracocha and Bolivar, we have lots, and you'll see lots of exploration success that we already have in the pipeline being announced over the course of the next 3, 6, and 9 months that'll show very, very strong potential to grow the operations as we go forward.
Fantastic.
So these are virgin properties in my mind, and the strongest factor that the company has generates strong cash flow, and then everything above that is gravy.
Fantastic. You are producing like 5 metals, I would call it. You do gold and silver, but more silver, of course, than gold. Gold is like a minor byproduct, I would call it. But you do also a lot of zinc and a lot of copper and lead, which I think is a fantastic metal mix for the future, for e-mobility, for solar panels, for laptops, for smartphones. Those are all the metals which are needed. Of course, the rising prices have helped you a lot, that's for sure. So can you give us a bit of a guidance what the company brought out for 2017? What do you think you may produce, like high and low, and where do you think, like EBITDA or cash flow wise, what can you achieve in 2017?
Well, I think in terms of production, if you look at a simple metric, in 2016 we produced about 85 million pounds of copper and about the equivalent of 11.5 million ounces of silver. And basically what we're looking at, we're looking to 100 to 115 million pounds of copper and about 11.5 to 13.5 million ounces of silver. So we're seeing about a 30% increase in our production, which is really strong. And as I mentioned, what we're looking at is as that drops to the bottom line to make us the most profitable in the company's history, giving us an EBITDA number, which I think is more than double what we had last year, or in 2016. So again, that's really the focus, but we'll see some strong exploration to take that even higher in 2018.
Fantastic. And we should say you are doing this with the same infrastructure, the same mines.
Same infrastructure,
you mustn't buy new ball mills, whatever. It's all there, right?
Unless we look to double our production.
That's another thing.
which isn't off the cards. But at the same point, for the most part, we have the infrastructure in place, and we very little capital expenditure to get there.
Super. Last question. Dividends. You know, the Germans love dividends. We are in a 0% interest world. Is there a chance that your shareholders will see dividends?
As you know, we paid a dividend in the past. And the fact of the matter is that we're not shy of dividends, and we'd like to pay dividends. We had the markets all went into financial difficulties in 13, 14, 15, where it wasn't prudent to pay dividends. But I think we'll be throwing off very strong cash flows, and certainly the board has reiterated very much that we're in favor of paying dividends.
Super. We like to hear that. We wish you all the best for a good year, 2017.
Thank you, Jochen.
And we are pretty sure we see us soon for another good update. I hope so.
We'll keep you posted.
Great.
Thank you very much.
Mark.
Thank you, Jochen.
I like it. Ladies and gentlemen, that was Mark Brennan, the President and CEO of Sierra Metals. And yeah, you heard it. First of all, the company is very healthy, very well cashed up, over 40 million in the bank, and debt is at 83 million approximately. They want to pay back at least 20 million this year in addition. So this brings a lot of risk off the company. And also what we like to hear is the grades are rising, they had good new discoveries, and also QC is developing from the little baby, now starts to learn to walk, and 2018 it shall run. So that's exactly what we like to hear. The guys are doing a great job. Check out the company, and also don't forget they want to pay dividends in the future. Thanks for watching us. Bye bye from Munich.